Hey there, Walter here from nakedforexnow.com, and I've got a question here from a trader who says, I've lost my day job and I'm looking to get as much advice as possible first. I've been over leveraging my account, hoping that I can make trading pay, and I've now had a few losing trades in a row after a few years of trading, which has nearly blown up my account. I've heard you say that you had the same situation when you first started, and I'm looking for some advice, please. I'm also not getting the consistency I expect as my back testing shows an 80% win rate with a 1-to-1 risk to reward ratio. I would be very grateful for your help, Walter. Okay, so this discussion starts with Ed Sequoia. Ed Sequoia, of course, was in the Market Wizards book. Many of you have probably read the Market Wizards book. He's probably one of the most well-known interviews in that book for many traders. But here's the important point when you're talking about risk. There's a percentage that you can risk to maximize your returns, okay? Now, in this curve here, it will shift, it will shift this way and it'll shift that way depending on the particular characteristics of your system, namely the reward to risk ratio, which is simply the average winner divided by the average loser. And then the other piece of that is the percentage of trades that end up being winning trades. So if you have those two pieces of information, the reward to risk ratio and the win rate, you can calculate the optimal amount to risk. So in this example, it's a 50% win rate system, and the risk to reward is 2-to-1. So when they win $2, and when they lose $1, for example, right? So you can see here the peak is at 25%. Now, the problem with it, so a lot of traders will look at this, and actually it's a little bit more complex than that. There's actually like a 3D curve to it. So, but it doesn't really matter for our purposes. We can just look at it in the two-dimensional thing. And what I want to point out here is that just because you can maximize your returns at risking 25% of your account on every trade doesn't mean you should. And beyond that, um, just because that's the expected maximum returns will come from betting 25% of your account on every trade, doesn't mean you won't go through a horrendous drawdown. So I've linked up this calculator below this video so that you can go and play around on your own. But what I want to do is just kind of run the numbers through here. What this calculator allows you to do is to calculate the risk of ruin, which is basically blowing up your account, or the risk of a drawdown. So for this exercise, it's probably better to use drawdown. Okay, so I'm going to put in 20% drawdown, and I'm going to say that because this person who emailed me, he had an 80% win rate, so I'm going to put the 80% in here. That's what this is right here. Probability of a win, 80%. And the win-loss ratio, which is this reward to risk ratio, is 1-to-1. Now, if you're risking 5% per trade, which it's kind of sounds, like a lot, but really, when they have drawdowns, sometimes people will get a little bit excited and they'll try and get it all back quickly. So 5% isn't really beyond anything that a lot of traders might, a lot of traders end up doing more than this, but 5% isn't a lot, especially when you have a small account or if you've had some losing trades, you're trying to get it all back at once. So what I'm asking here is if I have an 80% win rate, I have 1-to-1 reward risk ratio, I'm risking 5% on each trade. I'm looking at 10 over the next 10,000 trades, what's the likelihood I'm going to have a 20% drawdown? The answer is almost certain. Now, I don't know how much this person's risking. I don't know if it's 3% or whatever. I really don't know. But the important thing to keep in mind here is that even with an 80% win rate and a 1-to-1 reward risk ratio, if you start to creep up your risk percentage, your risk per trade, you are going to have bad drawdowns, and that's just bad luck. So if you're assuming that you're executing your system correctly And assuming that you're not changing things and reducing this reward risk ratio because you're taking profit early, so it's less than 1 to 1 and it creeps down to 0.85 to 1 or something like that, um, you're still going to end up with big problems. And a lot of traders don't even know how to do this. They don't know how to go through this. They don't know how to calculate what the likelihood is of a 20% drawdown or whatever it is. So I think that if you've been through this, just know that a lot of the market wizards have also been through this, right? A lot of the people that are interviewed in market wizards, they went through horrendous problems and blew up their accounts, and that was the lesson that sort of leveraged they leveraged that lesson into a successful trading career. So just know, because it's happened to you doesn't mean it's all over. Maybe you do want to walk away, but when these things happen, it can often be just something that you could have anticipated had you gone through this calculator and figured out, you know, okay, well, these are my numbers. What's likely to happen here? So I just want to point out that um, most traders don't understand how likely it is that they're going to hit a drawdown of 30% or 40%. These things just aren't known, right? So if I'm risking 5%, I've got 1 to 1 and an 80% win rate. I've got like a 1 in 4 chance of hitting a 30% drawdown. 30% drawdown doesn't seem like a lot, but if you're trading 200,000 euros, that's 60,000 euros that you lose. That can be really significant to some people to feel that pain. So please play around with the calculator if you've never done this before, so you know what to expect. And if you're in that situation where you've had losers and you're trying to get them all back quickly, just know that that's the number one disaster. You can ask any broker and they'll tell you the number one disaster for traders is that traders are trying to make their losses, they're trying to dig out of that drawdown. And it just sort of avalanches on them because they're risking more money um, to get back to where they were. And then what happens is they lose more and they're losing faster. So you have to risk more money and so forth. It's a never-ending cycle. So I just wanted to point this out. Please use this link. I think it's invaluable, and figure out what risk amount you can get to so that it's unlikely you're going to hit that really serious drawdown that's going to cause you psychological damage. You want to be down here in the 0 to 0.5% range where, if I'm risking 2%, I've got a 1 to 1 reward risk ratio and an 80% win rate. I'm probably not going to hit my 20% drawdown. It's very, very, very unlikely. So that's where I want to be. I don't want to be in that situation where I know that I'm going to hit that drawdown.